I'm going to outline why and how to backtest to create a profitable trading system to hopefully get you profitable in potentially under 4 weeks. I'm not here to tell you which strategy is the best and ultimately how to trade, but I'm here to tell you how to collect data and analyze data to improve your own strategy all by yourself. One of the main things that all profitable traders have in common is that they can analyze their data. They can improve their trading system all by themselves without needing some sort of coach or mentor, and they can endlessly improve. So 1 or 2% better every week. Now, I don't mean that in terms of gains, I mean in terms of performance and their approach and their system and what they need to change or not change. And just having a look at their results, and we get a lot of results quickly from backtesting, is a way to improve that quickly. What actually is backtesting? So my version of backtesting is on Tradingview, going back in time using the replay feature, and then moving the candles forward quite quickly and placing trades that fit my rules. And then from here, you then put this data into a spreadsheet with loads of results, and then you track different types of results. It could be that you track what the win rate is. It could be that you track what the maximum risk to reward could have been on every single trade. It could be that you're tracking your max win streak, your max loss streak, which zones work better. Is it the zones where it's the third test of the zone, or do the zones work best where it's the fifth or sixth test of the zone? Essentially, you collect a ton of data and you decide a metric to track for that data. Here, I've got a template, and this template is completely for free, and the link's in the description. The first thing we're going to look at is the trading rules. So here, I've just given some very basic trading rules as an example of what I'm tracking and what I'm doing. Now, your rules don't have to look like this. You can make up your own. What you do from here is you choose one of your rules. So in my case, I've got 3 rules, and you're going to choose one which you want to track. So I'll give you an example for each one, but we're going to go with number 3. We're going to track using a 1 to 1.25 risk to reward and just using a 1 to 1 risk to reward, and we're going to see what's actually more profitable overall. Also, the idea for number 1 here, when you're finding a clear support resistance zone, some of you like to do this. It could be that you track zones where prices interacted with, say, no more than 4 times, and then it could be that you track zones where prices interacted with over 4 times. And then from there, you can then get a different set of results, one being with fewer interactions, one being with more interactions, and you can see which works better. And then whichever works better, you do that, and the one which works not as good, you get rid of it. And then for rule number 2, we've got enter in the middle of the zone if price rejects. It could be that after a while you need to get more specific, and you need to see, was it 1 rejection candle, was it 2 rejection candles, was it a big bearish like engulfing candle or bullish engulfing candle, or was it just like a hammer? So whatever it may be, you can go into a bit more detail in each of these rules to really find out which way works better. And eventually what this does, and it gets you, and I'm still on this journey myself, is gets you to a point where I'm actually trading less than ever, because what you're looking for is just much more specific, and so many things don't look right now. So many trading opportunities just don't look that right. So when a good one does come along, it's actually quite few and far between, and I'm taking anywhere really from like 1 to 3 trades per week. And if you want to see all my analysis on a day-to-day basis, I've got a link to Telegram in the description. It's completely free. I just share my thoughts and ideas every single day. Here's what we're tracking. We're tracking a 1 to 1 risk to reward result and a 1.25 risk to reward result. Right, so now I'm going to show you a few examples of how to actually collect data. So we're going to get up a fresh chart, and you don't want to cheat, right? So you don't want to see anything that's happened. So you scroll away so you can't see the price, and you go back like any amount of time really that you like, as long as you're going back to a time where you don't know what happened at this period in time. So we've gone back to August 2023. You just jump up here, hit the replay feature, and go from there. Reset the chart, and then now from here you can start to draw up some trades. Let's just say I thought that was a zone, and if price gets up here, then I'm going to take a trade. Here we go, price got to the middle and it's rejected. Let's hit my rules. So I'm going to enter here with a 1 to 1, and then we'll also see if it hits a 1.25. Okay, so this one was a loss. So simply what happens is, once the trade's finished, you come here, you click copy link, then you come back to where your data is, you paste it in, and then you just paste in some results as numbers. Because then what you can do here is, once you get a whole row of numbers, you can then get the totals here at the bottom, and then that can just put it in literal, data terms, which strategy so far has proven to be more profitable. But essentially, in a nutshell, that is it, right? You obviously get multiple trades. You decide which metrics you want to track and improve. And typically, this is fantastic if you're starting out with a strategy. You don't want to risk real money, and you want to figure out what seems to work the best, what doesn't. You need really around 50 to 100 trades on something before you make a decision. And these 50 to 100 trades need to be similar setups, right? You need to stick to your rules. They can't just sort of be random. So essentially, it depends how many rounds of this you need to do until you have a profitable trading system. It could just be that you're very close, in which case you need to track just one metric, so around 50 to 100 trades, until you realize whether that metric works or doesn't, or how to change it, and then you're profitable. It could be that you have to do that a couple times. Now, if you're brand new, there's a whole nother element to learning, which is the mindset and how to structure risk and things like that. I've got other videos on that. But that's why I truly believe if you put in the work and you work hard enough, you put in enough hours, collect enough data and understand it and analyze it, you can become profitable within 4 weeks. And if getting profitable within 4 weeks is something that interests you, then I am opening up some spaces for some intensive training. Now, there's no website for this, there's no advert. You just need to email me if you're interested. And essentially what it is me and you work one-on-one together for 4 weeks. We have a meeting every day. We structure sort of how your life works and how busy you are. But essentially, the plan is to get you profitable within 4 weeks, and if you're not, you get your money back. So if you're interested in that, then do feel free to reach out and email me. My email will be in the description. Yeah, that sort of wraps up the video. The only bit to do after you backtest it is then to forward test it, get profitable in forward testing, then to do it live. Because live is always a bit different. There's a few emotions at play. Sometimes the spreads come into play and take you out and can ruin your win rate a little bit. Backtesting and getting profitable whilst backtesting is step 1 on a journey to become a profitable trader. So I hope you found this video useful. Cheers. See you next time.